From the very first second, you need to feel this question burning in your mind. What if the money in your pocket was never truly yours? What if every coin, every note, every digital number you see on a screen is part of a system designed centuries ago to control who rises and who falls? Long before apps, banks, or blockchains existed, power was decided by who controlled gold. Gold was not just metal, it was trust, it was authority, it was survival. Empires didn't conquer lands first, they conquered treasuries. When ancient civilizations realized gold didn't rust, didn't decay, and couldn't be copied, it became the ultimate weapon. Whoever held gold could hire armies, build monuments, and rewrite history. But here's the part: history books rush past. Gold didn't just represent wealth, it represented obedience. People trusted it blindly. Kings understood this perfectly. They stamped their faces on coins not for decoration, but to tell the public, your wealth exists because I allow it. And that idea never disappeared. It only evolved. As trade expanded and empires grew too large to move gold physically, a dangerous idea was born. What if gold didn't need to move at all? What if paper could represent gold? This wasn't innovation for convenience. It was the first crack in reality. Goldsmiths began storing gold and issuing receipts. At first, these receipts were honest. One paper, one promise. But humans are predictable. Greed always finds loopholes. Goldsmiths realized that not everyone would come back for their gold at the same time, so they printed more receipts than gold they actually held, and nothing happened. No riots, no collapse, just profit. That moment quietly changed the world. Money was no longer backed by reality, it was backed by belief. And belief, once controlled, is more powerful than armies. This is where the hidden war truly begins. Banks didn't rise because they were trusted. They were trusted because they became necessary. Kings were constantly at war, constantly broke. Banks offered loans in exchange for influence. Slowly, monarchs became dependent. Power shifted from crowns to ledgers. Wars were no longer fought just with swords, but with debt. Entire nations began living on borrowed gold that didn't even exist. And the people, they were never informed. They were told this was progress, that paper money was freedom, that banks made life easier. But convenience always has a price, and that price was control. Fast forward to the creation of central banks, and the system becomes nearly invisible. Money creation was centralized, wrapped in complex language, and hidden behind authority. Ordinary people were taught never to question it. This is how the economy works, they were told. But here's the uncomfortable truth. Money stopped being a store of value and became a tool of policy. Inflation wasn't an accident, it was a feature. Every time more money was created, the value of existing money quietly eroded. People worked harder, saved longer, and still felt poorer. But the system blamed productivity, consumer habits, or global events, rarely the source, rarely the printer. Then came the gold standard's death. This wasn't a sudden decision, it was a calculated escape. Gold was a leash. It limited how much money could be created, and limitation is the enemy of control. When governments officially cut the tie between money and gold, they gained something unprecedented: infinite expansion. Money could now be created from nothing, backed by nothing but promises, and promises, unlike gold, can be broken quietly. The public celebrated. They were told this meant stability, growth, flexibility. What it really meant was that money had fully transformed into an instrument of influence. Your labor could now be diluted without your consent. As decades passed, money became numbers on screens. The physical connection disappeared. Banks no longer needed vaults full of gold, they needed servers. And with digitization came surveillance. Every transaction could be tracked, analyzed, and controlled. Convenience reached its peak. One tap, one swipe, no friction. But friction was the last defense. Cash was anonymous. Digital money remembers everything, and memory is power. This is where the war for financial control shifted from institutions to technology. Then something unexpected happened. In the shadow of a global financial crisis, a silent rebellion emerged. Bitcoin. No king, no bank, no permission, just code. To some, it looked like nonsense. To others, it felt like the first honest money experiment in centuries. A system with rules no human could change, limited supply, transparent ledger. For the first time since gold scarcity returned, and that terrified the existing system. Because control depends on flexibility. Bitcoin was rigid, predictable, unforgiving, and once again history repeated itself. Those in power didn't ban it outright. They labeled it dangerous, volatile, irresponsible. The same words once used against paper money when it threatened gold. But here's the deeper truth most people miss. Bitcoin isn't just about price. It's about choice. It exposed a secret most never questioned. Money doesn't have to be issued by authority. That single realization cracked centuries of conditioning. And suddenly, the conversation changed. Governments began racing to create their own digital currencies. Not because they loved innovation, but because they feared losing monopoly. Central bank digital currencies promise efficiency, inclusion, and safety. But they also promise something else, quietly. Programmable money. Money that can expire. Money that can be restricted. Money that can be turned off. Think about how far we've come, from gold you could hold, to paper you could question, to numbers you can't see, to digital tokens governed by rules you didn't write. The war for financial control has never been about technology. It has always been about trust. Who do you trust to define value? Who decides what your work is worth? Who controls the flow of exchange that keeps society moving? Every evolution of money has moved control further away from the individual and closer to centralized systems. And every time, it was sold as progress. History doesn't repeat because people are foolish. It repeats because systems are patient. They don't force change. They wait until resistance feels inconvenient. Gold was heavy, paper was easier, digital is effortless, and effortlessness is seductive. But ask yourself this: if money is power, and power shapes freedom, how much freedom do you really have when your wealth exists only with permission? When a system can inflate your savings, freeze your account, or rewrite the rules overnight? This isn't about panic, it's about awareness. History shows us that financial systems don't collapse loudly. They transform quietly, one policy, one update, one crisis at a time. People don't lose money suddenly. They lose purchasing power slowly. They don't notice chains being added when they're made of convenience. The hidden war for financial control isn't fought with weapons. It's fought with narratives. With education that avoids certain questions, with complexity that discourages curiosity. From gold to digital money, every step has been framed as inevitable. But inevitability is often just unchallenged design. The future of money isn't already written, it's being negotiated right now, between freedom and control, transparency and authority, scarcity and unlimited creation. And history gives us a simple lesson, repeated again and again. Those who understand money early don't just survive changes, they shape them. Those who don't, live inside systems they never agreed to, wondering why working harder never feels like moving forward. So the real question isn't whether digital money will replace gold or cash. That's already happening. The real question is whether this next chapter will finally return control to individuals, or complete a cycle that began centuries ago when trust was separated from truth. Because once you see money for what it really is, you realize this war was never hidden at all. It was just never explained.